Guys, what's going on? My name is Ryan. I do technical analysis on 3x ETFs and like to make videos of it and share them with you. Sorry I didn't get a video out last Thursday. I was busy redoing a bunch of my charts. A few of my trades weren't going my way, and I decided to take a deeper look into them and discovered a lot of cool stuff that I'm looking to share with you. That being said, this video might be a little bit longer, and I'm going to try and briefly explain a couple patterns that are lesser known that I had to look up and explore the different patterns and volume um, indications behind them in order to kind of recognize the patterns in the charts. I think that some of the reasons that most people, that a lot of people are getting things wrong in this sideways market or whatnot is that they're looking at the typical patterns such as the descending triangle or the flag pattern and whatnot, and not some of the lesser known patterns. That being said, let's get it going. Got more going on with the TECL chart, I guess. So here we are at the daily. You can see this nice diamond continuation pattern we had here. I hadn't seen this before until I really spent a lot of time working on these charts and looking at all the patterns throughout the history and whatnot, because I found that a bunch of the patterns that I found today have repeated themselves in recent history. But this diamond pattern was kind of cool to see. I think it was the only one that I saw of the ETFs that I had reviewed. So we're on the daily chart. Let's move in here real quick. The TECL chart looks a whole lot like the XIV volatility and the SOXL semiconductors or ETFs. Honestly, I don't have a ton to say about these stocks comparatively to your GDX, which have more complicated patterns at the moment. I mean, basically to me, this just looks like an extremely bullish run that we're having right now, where we've been in the channel for the last year. We've moved up, what is it, $30 to we're at 81 right now over the last year, and it doesn't seem to be slowing down anytime soon. I've identified some support and resistance lines, and we'll zoom in close to the chart, and then I want to take a look at the RSI. Just right off the bat, let's go ahead and look at the weekly RSI, because I think it's kind of the message I want to share about these stocks, these technology stocks, the semiconductor stocks, and the volatility inverse stock, is that the RSI is at almost historical highs. We can see that over here in, it looks like mid 2014, we're at 83, and right now we're trading at 82 RSI, which is extremely high. I'll show you again what I mean on QQQ. But let's just zoom in here real quick and check out some of the things I'm seeing here in TECL. So let's go from the weekly to the 2-hour. So like I said, we're just in a straight uptrend. I can't really, I could identify some Elliott wave patterns, but a market will remain overbought for longer periods than you think. For example, I sold out of my shares. I bought a bunch on this dip here, and I sold out at this double top here. Little did I know that it still had, $5 left to run. I just wanted to secure some profits. Nobody ever went broke taking profits, I guess. So here in the 2-hour chart, let's just look at the time fibs. We've got a low here, a high here, breakout here, and I'm not sure what this is going to be over here. I think it has the potential to be a top. You can see down here we hit a bottom, we hit a top, we hit a bottom. We missed, we came up halfway, we missed the top, we missed the bottom, and we came up here and we hit the top 3 times, came back down, hit the bottom. We came up here and we didn't hit the top, and we came back down and touched the bottom again, and now we're hitting the top again. So the reason I went through that is just to illustrate, this this channel we're in right now is a very strong and tight channel. Whenever it hits the top, it has a tendency to either A, move sideways, or B, go down fairly quickly. And I'm not the kind of trader who likes to, sit on a stock that's moving sideways for several weeks. That's just me. This is not a long-term investment for me. But these time fibs here kind of outline those price points in time. So if you skip every other, you've got a low, a high, halfway up, and this might be a high again. If you want to go with the pattern, it might be a low again. It might be down here. But I think we have some pretty well-defined support zones, and I don't think that technology stocks are going to crash anytime soon. I think that technology is the future, and basically the market will go down, the first indication that technology is going to go down. And at the moment, I don't think that, Wall Street is going to let the market go down without, forewarning. For example, I mean, what I mean by forewarning is I can't identify any bearish sentiment right now in any of the technology stocks. However, as soon as we start hitting stuff like this and we continue moving on up and then we drop big like this, we move sideways and we pop a little bit, that's kind of a warning indicator that, things are moving more sideways, they're getting more choppy. But the nice thing about these stocks is they'll have these nice, long, beautiful runs up. It'll just run up and up and up. But as soon as, I start seeing some of this stuff, I'll be able to, try and identify some of that. But right now we are just screaming higher and it's pretty crazy. Let's move into the 1 hour real quick. So just on the 1 hour, I've identified in these light blues, and you'll see that throughout all of these ETFs that I talk about, some divergence patterns. And let's just talk about the divergence patterns here real briefly. So down here is my slow stochastic. It's really good at identifying divergences in price. So we see down here, we're basically at highs, and we come and set new lows in, and we pop up in price, and we come in and we set higher lows, while price makes a lower low. And we do it a third time, which makes it significant, especially since it's on the 1 hour chart, and we make a higher low again, and this makes a lower low from right here and right here. So this is a bullish hidden divergence right now. Actually, no, this isn't a hidden, this is a regular bullish divergence we got going on in price right here. And then I saw something right here when doing my analysis. We've got a actual hidden divergence where the slow stochastic comes way down, sets this low, price moves up even higher, and then it dips down, and our slow stochastic makes a lower low, but price makes a higher high. So that's what I mean when I'm talking about these divergences here in these charts. And then, we did end up having that huge reversal, that sell-off, and then we ran back up. And we're coming into the third divergence here, where we run up in price, our slow stochastic dips down a little bit, and then we come and run up even more in price, and then the slow stochastic makes a lower low. So we've got a higher high in price and a lower low in our slow stochastic. This is another hidden divergence, and it's got me a little bit nervous about what's going to happen with TECL and QQQ. What I've got going on here is kind of a rising wedge that I'm seeing, and it was only created because of this massive sell-off, and I don't know whether just to ignore it or not. Just trying to put all the information out there. So basically we've got this rising wedge going on. I've got this kind of making, I mean, it's almost a parallel channel, but it's not. I almost have to do this just so you can see the chart because it's risen so high. But you can see it a little bit clearer here. This is a lower angled resistance line, and this is a higher angled support line. Essentially, these two are going to come to an apex, and price has to move downwards. All right, so these divergences have been pretty good at predicting price. We have a reversal here, we have a reversal here, and now I've got a bearish one right now. But like I said, I'm not going to be the one to short any of these, your semiconductors, your technology, your inverse volatility ETFs, because I think that a lot of people have gotten burned calling the tops in these. But let's move on to the 30-minute chart and see if we have anything here. Ooh, I forgot to mention that. This RSI is another indication. This RSI has moved way down, and this price has continued to rise. That's a second divergence that we have here in the exact same timeline. We've got a larger one here in the stock, and we've got a shorter one here in the RSI. Both are pretty significant. If we look at our time fibs again, we're coming up on this one right here. Just to give you a sense of timeline, if you do believe in this, I think it's somewhat helpful, but not the be-all end-all. All right, so let's move on to the 30-minute. So I've got a mini Elliott wave outlined here. I think we came down, we set our low, and we popped back up, and we came with this impulse wave. We had a 1, 2, long 3, consolidated 4, and now we're in 5. Along the way, we came in with this descending triangle, which is a bullish pattern because price rises into it. We hit our top, we set our resistance line, we come down, confirm our support line, set our A, B, C, D, E, and then we break out with conviction. So as far as resistance points go, higher places to consider exiting if you are holding this ETF would be this 141.4 fib retracement. Here, I'm actually going to draw these out so you guys can see what I'm talking about here. This is our 141 fib retracement right here. Next up is the 161 up here. I've got a $82 sell target for the 141, but I find the 161.8 more significant sometimes, and that's at about 83.50. Just perhaps two potential places to take profits at. And if you don't like this shorter timeline, this is about a month-long Fibonacci level. We can go all the way back here and go to this top right here, this consolidation zone, and we get the exact same thing. This lines up with the 141.4. So this is a double resistance zone, and it is the 161.8% Fibonacci. And so yeah, one more time, about 81.50, and the other one is 83.50. So, you know, nobody ever went broke taking profits. We never hit our top over here. We came down, touched our bottom. We are currently hitting our top over here, as well as the fifth wave of the Elliott wave coming in. I just wouldn't be afraid to take some off the table, waiting a week, and maybe getting in at a similar or lower price. Let's go to QQQ. I have some notes for QQQ. I outlined that continuation diamond that we had right here in the middle, and then we just bust out to the upside here. You do see a more well-defined ascending wedge here going on than we had in TECL. It is a longer term, which means it's more significant. We can see that, you know, this is a clear, you know, previous trend that we have yet to retouch, and we see that this is the new trend going on here, and we are coming to the apex point right here, and I would be careful to long a position right now. It seems like you would be chasing, in my honest opinion, but then again, I would never recommend shorting this. It's just, you know, food for thought. Basically, another thing that kind of sets me off is we have these wider, longer term looping patterns, and then they get skinnier as we go up here, and that just means that price is kind of getting squeezed here, and we finally, it looks like, hit our top finally. This is the first time we hit this top since early 2015. So you can see how overbought we are. Let's go to the weekly. I wanted to touch on QQQ's weekly RSI level, because we are actually hitting a new we are at the previous all-time high here of 81, and this is the second time, it looks like. Oh, no, looks like the third time ever that we've hit this RSI level, which means it is overbought. It's undeniable right now. You can't say it's a long-term investment. You know, I guess you can. You can't say it's a long-term investment, but my point stands is that we are overbought. For example, if you come down to the regular overbought zone, which is 70, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times that we touch it. That's, you know, a lot more reasonable to hold on to a position when it's at 70 RSI and still considered overbought, as opposed to holding it on to at 81, or even worse, you know, entering a new position. Again, just my 2 cents. So I just wanted to share that about QQQ. And last but not least, with technology, I was looking at some comments, and this one individual brought up this interesting thing about Microsoft, and he attached this quote, which I really loved, which was by Mark Twain. He said that history never repeats itself, but it rhymes. And this is shown very clearly here in the chart for Microsoft, I think. And I'm just going to draw it out for you so you guys can know what I mean. So we've got our top over here in Microsoft. I'm going to clone it, and this is back in 1998, so a good while ago, and bring it to the lows down here in 2009, and you can see that this clone from the low of Microsoft to its high is about the exact same price that we were at right now, from our low to our high, 12 years later. So that's the last comment I have on technology stocks is, be careful, maybe secure some profits, maybe wait for a pullback or consolidation zone. Technology is, the future, and I'm not bearish on it at all. I'm just saying that I'm not bullish because of the following facts that I stated. All right, so from technology, let's move on to semiconductors, which has